We're gonna start today with the DXY and the S&P. We're gonna have a look at them, and then we're gonna do the weekend levels for Ethereum and Bitcoin to see where we're gonna trade between, and then we're gonna look at the trades that we had available this week in Ethereum and Bitcoin, and we're gonna map out their pivots, where the pivots were, and which direction they indicate the price action is going. Because there were a couple of very good trades in terms of range on mainly Ethereum compared to Bitcoin. Bitcoin's rise was not so much, but it's good to map out those pivots so that we know them in the future, and we're able to stay more adaptable and go with them. So we're going to start with the DXY, and the DXY is, again, the daily is in contrast to the 4-hour momentum. So the daily stochastic has turned down, while the 4-hour momentum has bottomed out. Now, it's been printing lower lows over the past 6 times 4, 24 hours. So the DXY has been dropping constantly over the past 24 hours. It broke through the previous level of support, and now it's heading towards the next level of support at 102. And I will show you where this level is coming from, all the way down from 2016. So this is a historic level. Let me just adjust this line a little bit. There we go. So that would be the next level of support for the DXY if the day decides to push it down towards that. Now, of course, we know that if the DXY pushes down, crypto pushes up. So that would be the issue. However, this week I've noticed crypto doing its thing and the DXY doing its thing on a couple of occasions. So while we are discussing the DXY, I think it's good to look at the coins and look at their own individual levels and patterns and trade accordingly. So yes, the macro and the DXY matter, but I have seen in the space of 12 hours them doing the same thing where normally they do the opposite thing. So, and it's happened twice so far this week. So that's why I'm saying let's look at the DXY, but let's look at as a contextual move rather than as a trading decision or trading signal. So the DXY would have space to push down and would have turned momentum to push down towards the 102. We're going to see if it's going to go there. My projection is it will, and it'll at least come to the bottom of the Bollinger on the daily, so it will keep pushing down. The 4-hour might cause a little bit of a retracement so that it goes a little bit up high from where it is right now, because it is right at the very bottom. So, you know, when I see when I don't see confluence between the 4-hour and the one day daily frame, I anticipate a little bit of sideways retracements, but they won't. I don't anticipate them to be big in terms of, you know, percentages or moves. However, speaking of the DXY, we have super important news coming out today at 1:30 p.m. UK time. We have the hourly earnings, the non-farm employment change, and the unemployment rate for the US. So big news coming today. The whole week was full of news. There was volatility in the charts. So we're going to see if this news does one or two things. So the one thing that I expect it to do is to push down to correct the swing that it's made for Bitcoin and Ethereum, because none of them have made any significant corrections, and they are impressive percentages. And two things. The second thing would be if the news pushes price action up again one more step before it brings it down. So I'm gonna factor these in when we do the trade setup. So for the DXY, I expect the news to bring volatility. With the DXY being volatile, crypto will be volatile as well. And we're gonna see if it is gonna bring Ethereum and Bitcoin into that higher space. there's one step higher to go for them, or it'll just push them down into their corrections. Now, let's see where the S&P is. The S&P the S&P has broken the divergence line. This is quite important because Bitcoin and Ethereum have both done it too. So it's broken the daily divergence line. Let me change to the daily. There we go. And now it is in process of confirming that daily divergence line. So here's where things can go very well, or they can go terribly wrong. On this divergence line, in the previous situations, here it met it, got rejected, dropped down. Here it met it, got rejected, dropped down. Now this is the third time. Usually we have 3 touches to the bottom, 3 touches to the top. So this would be the moment when a channel would break out. Now, in order to confirm that breakout, we need another daily candle above this line. The first one broke it today. If today closes above this, yesterday closed above it too. If today closes above it with a convincing candle, so not this tiny red swivel candle, this tiny red swivel candle, I wouldn't trust it that much. I'm expecting a proper breakout candle. This is what is, how can I say, the result of an accumulation of this proportion would be a decent green candle, not another tiny anemic red candle, or even if it's green, it doesn't matter. It needs to do 2 things. It needs to be a convincing candle, so continuation to the upside. As much as this is lifting to a higher high, it's not a, how can I say it? It's a swivel candle. It doesn't show the same conviction. And the same thing that and the second thing that it needs to do is to break this yellow line, which is the support and resistance of the next support and resistance level. So we need to see 2 things for the S&P today. By the end of today, a convincing green candle above the divergence line, and that candle breaking and closing above this yellow line. If we see those 2 things, we're likely going to get more continuation to the upside, because the trend to the upside is asserting itself. So it's imposing itself. Now, I have a big red flag for this lift. As much as the technicals look great, I have a big red flag. That's why, again, this is a moment when we need to trade with utmost caution. The stochastic on the daily is turned down. So how is this? And again, I'm not even mentioning the divergences, because I've mentioned them throughout our sessions. So if you look at the stochastic divergence, again, it's massive. But how can we have a breaking of a divergence line, a higher high on the day, and the stochastic momentum turned down? To me, this has, again, the looks of what happened. Don't know where that text box came from. Go away. So to me, this looks a lot like what happened here, and again turned down, maxed out daily momentum. What happened there? And again, the reason I'm saying that is look at this swing and how it's gone from, I admit, a very oversold situation to a very overbought, protracted situation. So starting October 2022, so a month and a week, this has been going up without any decent retracement to the downside. So we still need to see if today's S&P candle can turn the stochastic momentum up, and if it does so, it could continue higher because there is space for it to go higher. So it's not, it is maxed out when we look at it in the general flow of the stochastic. But if we look at the chart, because it's been up here for a long time, but when we look at the max level it can go to, it's 100, so we still have some space to go. So if today is a very bullish day with a big green candle breaking that yellow line for the S&P, we can expect more continuation to the upside. And there will be more continuation over the weekend for crypto. I always tell you that the end of Friday is essential for how the weekend is going to go. We've had very underwhelming ends of Fridays over the past 2 weeks, and that reflected in the very underwhelming weekend action for Bitcoin and Ethereum. Bitcoin's ranges are absolutely miserable at the weekend. It's not worth trading. It's worth monitoring and watching for the breakout that comes either on Sunday evening or Monday. Ethereum has slightly better ranges, but again, it's better to map it out in TA at the weekend and then watch for the movement on Monday, Tuesday, Wednesday, Thursday. Okay, now, what is the lesson that we get from where the DXY and the S&P are? They are in an undecided space because the DXY hasn't yet found support. And by not finding support towards an inferior level or at an inferior level, it can't move up higher. So it's coming down to find that support. And the S&P hasn't yet confirmed its breakout. So we don't have at the moment a breakout confirmed from the S&P daily chart, from the S&P daily wedge, and also the previous support and resistance level. And we don't have a support found for the DXY. Once these align and the DXY finds support and the S&P gets rejected, which is what I anticipate might happen, once these do once they do that, then we're going to have a little bit more stability in our crypto world. Until then, we're going to probably move up and down. If the S&P breaks to the upside today when New York futures open, and it does a very convincing candle, I think Ethereum and Bitcoin will follow into the next levels. And by next levels, again, while they are good trades to be made on the day, they're not breakout trades yet. So Ethereum and Bitcoin are yet to confirm their breakouts by breaking the previous resistance level. Now let's look at the levels moving into the weekend. This is the daily chart for Ethereum, and as you can see, I'm not going to repeat what I said about the S&P because I've also posted it in the chats. Both Bitcoin and Ethereum are printing a divergence break on the 1 day. So they have both closed above the 20 for 2 days. They are above the divergence line. Let me just double check. Bitcoin is not yet, it was above yesterday, but it's right on it today. But Ethereum is stronger in the lift. So Ethereum, how can I say? I'm going to make this point for both of them because as close as Bitcoin is at the moment, Bitcoin is very close. So there's no point making two different points. So they are above the daily 20 EMA and they are above the divergence line. So this divergence line is essential because we need to see continuation from this divergence line. We don't want to see, again, the S&P printed a higher high yesterday. Bitcoin and Ethereum did, let me check. Bitcoin did a higher high, Ethereum didn't. But they are staying above the 20 EMA. With this 20 EMA, they have great support on the daily. We need to see continuation from here. So we can stay above the 20 EMA and not go anywhere. And I'll show you what I mean by that. I mean a candle of this size, I mean a candle of this size. So this one breaks it, this one confirms it moves on. This one breaks it, this one confirms it moves on. And these candles are significant candles. So this is a 17% lift. This is a 10% lift. This would be a massive lift just over the next 2 days, 18%. So we need to see this kind of continuation. If we don't see this kind of continuation today, I anticipate a rejection from where we are and moving down. We are, again, just like the S&P, we have had a great lift for both of them. It's been a wonderful lift. I didn't expect it to go so far so quickly. It was a very fast bull rally. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, and in 11 days it's gone up 22%. So massive lift. What we need to see here is either the continuation of this momentum with equally strong momentum, or we'll move down below the 20 EMA, because we haven't gone too far from it either. We are going to come down. We need to backtest the 20 EMA as well. ETH hasn't backtested it yet. And then we're going to see which way this is going. So it is, to me, it's not clear that we're either going up or coming down. I see validation, initial validation signals for moving up, like breaking the 20 EMA, but I also have my red flags when it comes to that, because the stochastic on the daily, just like the S&P, has been maxed out for a while in the overbought area, but it is turning up today. So we need to see where this is going to go today, and how we close today influences how we're going to continue at the weekend. It doesn't mean necessarily that the weekend will be a big move weekend. If Friday is a big move weekend, if Friday is a big move Friday, if we finish on Friday after having lifted significantly, the weekend will be a very pumpish weekend. If we finish the Friday after having dumped significantly on Friday, the weekend will continue dumping. If the Friday finishes as it has on over the past couple of weeks, because I've been monitoring it at the end of the session, it was a very how can I say, mild lift or a mild drop, and the weekend continued sideways with a, how can I say, a lift or a drop tendency, but nothing spectacular. So if Friday doesn't finish with a nice intentional move, then we won't see any big moves at the weekend. Not unless crazy news comes out, but that's the X factor of this whole situation. So how would I advise you to trade this weekend? I wouldn't advise you to trade. I would advise you to wait if you're not in a position. If you are in a position, the position to hold, in my opinion, right now is a short position, because I anticipate further move to the downside. Even that short position needs to have an invalidation. So again, it depends on your personal management, how you want to manage your capital. But for instance, if it goes past the 55 on the daily and continues to stay there, that's the 1320 for Ethereum. I'll adjust it for Bitcoin as well. If it goes there and stays there and is not rejected there, then I would be looking to close the trade on a correction. So don't close it on a high. There will be a correction. This is a massive lift without having had any decent correction. This was a 0.5 correction, and we haven't seen this correction yet. I've said it in I think it was yesterday's session. So we haven't seen any correction yet. We are yet to see that correction. Now, also, my invalidation for Ethereum is not this line. I will write it down on the 1 hourly. And I'll show it to you on the MA's charts. Okay, so if we are to look at this and consider this a W pattern, here, 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 and then up from here back to the top, back to 1700. Now the technical confirmation of the lift for Ethereum would be, and the invalidation of the drop would be coming back up above 1350. We have a technical target at 1400. Can it go up to 1400 and stay in and around there and then get rejected? Yes, it could. But this would be the peak of the W, so 1350. We might not even get there, but if I were trading this, I would watch to see what happens when and if it gets there, and then be watching for a retracement from that level and coming out if that retracement holds that level. It's all in how we retrace from a move to see if that move is going to hold or not. The way, for instance, this correction here, when we set the trades up, this correction here can go two ways. It can continue downwards if it breaks the support and resistance line, or it could continue to the upside if it doesn't, if it holds that line. Unfortunately, here is where we are, and we have to trade accordingly, which means a little bit more mindfully and a little bit more adaptively. No big positions, and always keeping the invalidation levels in mind, and not panicking when those invalidation levels are met, waiting for a correction from those levels. Okay, now this is the 4-hour structure that Ethereum has been moving in. To me, this looks like a head and shoulder structure. We are back below this top line of support and resistance. We have a lot of indicators signaling a pivot for the 4-hour coming down. We haven't yet seen any correction yet. Sorry, no double yet. We still have to see a correction from this. This has totally been a market maker move. This was a week where the market maker pushed on the 1 hour, the shorter time frames, liquidity into the market, and there were times where this was a double top, this was a double top. These were all, when we're going to discuss our trade setups, these were all traps to trap shorts. Loads of double top situations, loads of topping out situations that didn't materialize into any decent short at the moment. On the contrary, it trapped the shorts and probably liquidated a lot of the high leverage short trades. Okay, now let's do the levels for the weekend, because that's the faster discussion. Now, when I was saying that Ethereum and Bitcoin haven't broken out of the structure, this is what I mean. Our main trading space is between 1280 and 1070. We are still in that space. According to my swing count, we are yet to have a swing down and then another swing up and then another swing down. So we need at least a swing down, if not another swing up and down. But I would be mindful too as to the third swing, because I have seen channels break up sooner because of the volatility. So it depends how much volume goes into the market, what kind of pace the market is having at that moment. So every time we go into the third part of any pattern, whether that is a triangle, a channel, a diamond, whatever pattern it is, that's when volatility starts kicking in, and what we expect to happen doesn't happen. So according to my wave count here, we need another swing down. We need another swing to the low. We have one wave up, one wave down. We need this one wave up, one wave down, one wave up. We need another wave down. So we need another push to the downside. Now this push to the downside, I've corrected my fibs here. This push to the downside generally has two most popular levels. So and I'm picking the most conservative targets because right now we're talking about setting up the trades rather than TAing. So the first target would be the 0.5 at 1190. Coming down to the 0.5 at 1190 would still imply holding the 1180 support and resistance line. And this is what this is why I'm telling you about this, because we might come down and correct the swing and then lift up into the higher area of 1340, or I think the wedge has a channel of 1400, but that's just a pattern target. It's not a horizontal level, so I'm gonna go with the horizontal levels for now until this level, until the 1340 level breaks. I'm not going to discuss the 1400 because we haven't yet broken the level towards that. So this would be the first scenario where we hold the 0.5 as we did here, and we continue with one more leg up. So that would be the first scenario. That would be the first two trades to make. So the first one is the trade down into the correction, and the second one is if I am to put a fib onto the local here. So even this tiny swing up 1, 2, 3, 4, 5, this one hasn't even corrected yet. So we will, and that would be a 0.5 would be a 786 for this small level. So yes, I believe we will come down to test the 0.5, if not come down all the way to the midline at 1180, and then we're going to look there how we're holding that midline. This midline is like the backbone of price action in this channel. If this midline breaks, we're coming down to the downside. If this midline holds, we're going to lift up, and with what's happened here in terms of accumulation, we're going to move up to the next level. So you might want to watch for instance, in my Bitcoin trade, I'm going to watch for this level, and when it comes down to this level, I'm going to check to see how my profit is and look to either close part of my position and take some profit, depending on what structures are formed there. If there is a double bottom structure on this midline or 0.5, I would be closing my short and waiting for this to show itself. This week has been a little bit too consolidating for as far as I'm concerned in terms of momentum. So we still need to see what happens there. And again, if momentum breaks down to the downside, there will be levels of retracement to get in. So we're not missing out on anything, but we are taking some profits because we've been in trades for ages now. So here we are. If the 0.5 holds, if the 0.5 and the midline don't hold, then the next step is the 702 level. And the 702 level is a conservative target, is the conservative level. It could go down to the 786, but I choose to take profits at the 702. And again, if it breaks the 702, we need to see what happens there, because it could go up and back test the 1180, fail and come down. And if it fails and comes down, chances are it's gonna push down towards the 786 or closer to the bottom of this channel, so 1080, where Ethereum and Bitcoin love going. So it's in their patterns, and if you check, because I know it's a little bit difficult when we're caught in trades to look at this. Look at how many times it touches the bottom of the channel. The bottom of the channel was somewhere around here. I know this was an extremely long small range sideways, but we had the bottom of the channel touched 1, 2, 3, 4, 5, 6, 7, 8 times. So conservatively, we might one more touch to the bottom line here is perfectly within the range of Ethereum's previous patterns. It's not out of the ordinary. Now, again, I would be looking to take profit here because it hasn't broken through through this support yet. Here is where you have the tough decision of either closing your short position if you have a great entry point here at the 1300 area. This would be a hard decision to make because you need to give it a little bit of time. And here is where the MAs could tell you what's going to happen. For instance, if you look at the previous swing, it broke the 20 EMA on the 1 hour. It tested it 1, 2, 3 times, 4 times. It broke it. So you can follow it down here to see what's happening on the bottom line. Here we have a double bottom, and we also have the breaking of the EMA. So if you put a stop loss above the 20 EMA here, you give price action time to break, and if it doesn't break it and it retraces up and you're not watching it, you can still take your profit. So it's a small, I believe it's a small price to pay. Here would be 2%, but in the context of this swing, so let's say you have an entry all the way from up here, this is a 16% drop, so you could still be getting the 14% profit while leaving 2% on the table with a stop loss above the 20 EMA. This is what I'm looking to do if we break the middle line. So that if we break the middle line, we back test it and we come down here and we stay here putting pressure on this bottom line, I would be securing profit with a stop loss, because that will allow me to follow price action down, but it would also take me out if this retracement decides to happen. So that would be a tough trading decision to make, but again, you would take lovely profit from it. And then you can see what's going to happen. Remember, if the bottom line breaks, it won't be breaking and dropping. It might do it, but that's an exceptional situation. It's not the way it technically happens, or it regularly happens. So what you would see is it breaks it, it back tests it, and then comes down to build some more. So you will see a back test of this line if the downside is to continue. It doesn't go down in a straight line, it does a back test. And if you happen to miss a move like this, remember, it backtests to a previous level. It backtests to an EMA. There will always be a backtest. Anyways, so these are the two, maybe 3 trades that are available this weekend. We are still within the same range. Now, my question is, and I will keep you posted over the weekend as to whether the range will be expanded or not. My question would be whether we are going to stay exclusively in this top part of the range, or we're going to break the midline towards the bottom part as well. So basically, are we going to do the whole sideways channel, or just the top part here with the 0.5 consolidation? Because that is totally possible as well. We haven't had big ranges over the weekend. This was our range, I believe, this was the range from Saturday to Sunday. There's the last range, 22nd, yes, and this was the range this weekend. So we stayed in a very small range with very little happening. If I'm to look at the previous 2 weekends, we might have the same. We might do a correction today and then stay within that correction for the next 2 days. So between 0.5 and the golden pocket, that might be it along the midline. But we'll have to see. These are not at the moment levels that we have mapped out. So yeah. On the daily today, we are below the pivot point. but we are above the daily open, and we are not so far off from the pivot point. We back tested it once, twice. There was a lot of pressure put on the pivot point. Could this be a W to the upside? Yes, it could. There's a lot of MAs turning here on the 1 hour. So again, we could also, that would be a third situation. Let me map it out here. We could also lift to the 1314 without a correction. That can also happen. I'm gonna put everything in a chat when we're done, and explain what these three possibilities are. Okay, so seeing how the daily levels are today, seeing today's volatility, expecting today's volatility, not saying it hasn't happened yet. So expecting today's volatility and expecting and seeing today's levels, could we do a lift? Yes, we could, and then from there expect a correction. I think that would be the most advantageous. If you are in a long-term short, that would be the most advantageous thing to happen, because if it lifts to the very top of the range and gets rejected there, the drop from there will even be juicier than where it is right now. So I believe that would give us a little bit more oomph for the sell-off. So we have to see basically if the 1280 or the 1180 levels are held. If the 1280 is turned into support, we're going up to 1340. If the 1180 is held, we might be again zigzagging between 1280 and 1340. That's it. These are the levels that these are the levels that we have for this weekend. No big breakout at the moment. No level has confirmed it. There's no level is even being tested for it at the moment. But we do have on the daily that holding of the 20 EMA that changes the narrative. Every time the 20 EMA is held, that changes the narrative. It may be very short-lived. We might have a retracement today, but we have yet to see that. We're discussing about possibilities right now. Until we have a more certain testing of the levels on the 1 hour, we can't define direction much clearer than that. Okay, let's see where Bitcoin is. I'm going to do Bitcoin with the trade setups, and then I'm going to look at Ethereum's traps and pivots for the week, as part of our post-trade analysis. So for Bitcoin, we are on the divergence line. We are above the 20 EMA. We've backtested the 20 EMA, so the lift for Bitcoin wasn't as strong as for Ethereum. We don't have as much conviction as we've had on Ethereum, but we are still above the 20. We are holding, let me show you the 4 hour. We are holding the 4 hour 20, we are holding the 4 hour 55. And what is interesting for me to see, and why I believe, as much as I don't like it, because I am in a short in Bitcoin, as much as I don't like it, I see the 4 hour coming, the stochastic coming down with price action, not doing much of a correction. And that generally indicates a lift will happen before a drop. So I will be watching for today's volatility to see the same thing that I said for Ethereum. If today's volatility will take us from where we are up to the, I have two levels for Bitcoin, 17,500 and 18K. So these two levels are the levels that I'm watching. Now, on the daily, if I'm looking at the trader's reality indicator, on the daily we have a less, how can I say, again, it's less strong of a lift than Ethereum, because we are below the daily open, we are below the pivot point, so technically the downside is favored. However, we've had a lot of volatility, even at the weekend. There was a lot of volatility. There were moments when price action looked great for a lift, and then it just turned down and started correcting. Now, we've had a long swing, 7.8%. Just a second, give me a moment to have a little bit of coffee. We've had a long swing for Bitcoin. Again, Bitcoin's ranges are a lot more modest. This swing needs to correct, and I will be saying the same thing as for Ethereum. It can correct down to the 0.5, even the 702. So it could correct down to the 702. Hold the midline and then go up to the 17.5. We could see that. If that midline holds, we're gonna see a higher high. If that midline breaks, then we're gonna back test the edge of the channel. It's as simple as that. There we go. So we're gonna test the edge of the channel level at 15,800. There we go. So what we need to see today is how the 17.2 approximately level will hold. If the 17.2 is the 1280 for Ethereum, if these levels are turned into support from where they are now, resistance, we're heading up to 1340 for Ethereum, 17.5 or 18K for Bitcoin. It's clear as day. If this level is turned after all of this accumulation, we're going up one more step. If this level breaks, we're coming down to backtest the midline, and if we're backtesting the midline, if the midline holds, again we might be moving up, challenging the previous highs, or if the midline breaks, we're coming down. So again, nothing new here. That's all I'm going to say about Bitcoin, because I'm going to post this on the chats as well. And we need to keep in mind that apparently the FTX news has calmed down, and unless we get any more contagion news or any more FUD into the market, Bitcoin is holding good support. So it's holding solid support for the moment. And we need to see how this support holds on backtest. Okay, now let's have a look technically at the trades for Ethereum and the traps that were set this week. This week we had two traps set for, two swings that set up short traps for Ethereum, short-term short traps, short traders. So this week we've had, for the market makers, a very strong move to the upside. Over the past 7 days, 22% for Ethereum, and I'm gonna do Ethereum's range because it's easier to demonstrate with a generous range, but it's the same concept on Bitcoin as well. So what we had here was the context of a consolidation range. After a move this big, coins go into a consolidation range. That consolidation range can take anywhere from 4 swings to 8 swings. So we've seen the previous consolidation take 8 swings. This one can take a minimally of 3 swings. That's the technical number. Now, what we expect to see when price action pushes down like this, and I'm talking about this moment here. So price action pushed down, came up, back tested, and then started pushing down. What we expect to see here intuitively is more further down movement. This is what our brains think it's gonna happen. What happens technically I wanna talk about it from the technical perspective, because all of these trades were technically right. There was nothing dodgy or suspicious about them. What happened here was a double bottom structure, a breaking of the 20 EMA, a breaking of the 55 EMA, continuation to the upside. And this swing is necessary for the liquidity that is trapped here in these shorts to be collected if their liquidation ranges are somewhere around here. So this is the setup of the trap. There's a push down, there's another push, a big push down, there's a smaller push down. The support line is being challenged. Everybody expects it's going to drop some more. Here we have a double bottom structure, and if we look at that double bottom structure, this is the 1 hour double bottom, so this is technically a 4-hour trade if the signals are on the 1 hour. In this 4-hour trade, we expect a backtest of the 20 EMA. Now, because of all of this that happened here on the 4-hour, it was really hard to define how many backtests of the 20 EMA had been. But if we're taking the swings, we have 1 swing rejection, 2 swing rejection, 3rd swing rejection. So there have been 3 backtests here. The 4th one, it broke upwards. I didn't expect this to go all the way where it is right now. I didn't expect this with everything that was going on in the crypto world. This is having a 22% recovery after the 3rd or 2nd largest exchange in the States had filed for bankruptcy is very unusual. But it is the market makers artificially inducing one more lift. Again, the better the prices go, the higher the prices go, the more the better the profits for them. So it's normal for them to do it. So looking at the trade setups, when we have a swing like this that comes down to the support and resistance line, and yes, I agree with you, we wouldn't have had this line until this touch is made. So we would have this touch, and then we have this line in place, and then though we had it from earlier on, it wasn't, there we go. I remember it wasn't a new line here, but let's say technically we're not looking at what happened before, we're just looking at this swing and then this swing as well. So these 2 bottoms will create a support and resistance line here. The 3rd bottom comes here. Now, what could you have done here to stay more adaptable? And I'm not saying what you did is wrong, because I still have my short positions open and I'm holding them open. Again, because I didn't think it was going to go all the way up to the top of the range. So what you could have done here to protect yourself was, when this hits a double bottom, put a stop loss above the previous high, right about here, to protect yourself from a possible lift. You could have taken profits here, absolutely, but that means giving up your position. That stop loss for the price of that would have been a bigger stop loss than the 20 EMA stop loss. That's why I choose the 20 EMA. Is a little bit more flexible because it follows price action. So the previous high would be 4%. But remember, this is a 16% swing from the top to the bottom line. So if you had a great position here at these double tops, I'm not even talking about these 2 double tops, 16%, leaving 4% to give your trade space and see what it does here is less than 30%, which is again what all profitable trader take, 60%. We're not expecting to take all of this. Expecting to take all of this is unrealistic. We need to secure profits, and then by securing profits, give price action the chance to break down, because this could have broken down. Absolutely, it could have. If the FTX thing continued, and we wouldn't have had a slowdown or the market maker pump or whatever, this could have continued down. Absolutely, it could have been a massive spill, but it wasn't. It formed a double bottom structure here. Now, You can put your stop loss above the previous high, and that would, so that if this turns to be a W formation to the reversal, you get out of that reversal trade. You don't get caught in that, and you step away. Or you could put your stop loss above the 20 EMA if you want to be a little bit more generous, a little bit. You see here, it doesn't break it by too many dollars. 11.38, 11.45. So $10, let's say $15 for Ethereum above the 20 EMA. And if it breaks it by more than $15, again, you take your profits and you step away and you check to see what it's doing. So here I'm gonna put this as a trading strategy tip. Take profit at double bottom, or secure or the 20 EMA. Okay, so that would be the first thing to do, not to avoid getting trapped. The second thing to do is, let's say you get trapped somewhere around here. When you see this crossing, the 20 crossed over the 55 EMA, this crossing here spells bad news for any sort of shorts. Again, I would have taken profit here. This is not a it's past any sort of retracement level or strategy. This W has been confirmed. It's going to go all the way up to here. It's okay to leave 4% on the table, but going all the way up to here at least is 14%. So from your 16% trade, you leave 14% on the table. That is way too much. So this to me would have been the final point of invalidation. When I see this, I close the trade, and I'm looking for a retracement to catch the swing going up. And that retracement would be visible on the 15-minute, because this would be a 1-hour trade, and it would be somewhere around here or somewhere around here. So it would be, again, a double bottom structure on the 15-minute that would allow me to follow the trade up. Again, let's see some more traps that were laid out this week. So this was one of them, with all the pushes to the downside. The other traps were considering the double top formations that Ethereum is making. So there were 1, 2, 3, 4 double top formations, showing again accompanied by RSIs, which makes them a proper it's not just it looks like a double top formation. They are all accompanied by stochastic and regular RSI topping out, regular RSI topping out. So we have plenty of yeses to go into short trades here. There would be nothing wrong with going into short trades here. To me, this is the natural way to be trading right now. Wait for action to peak and then short it on the way down. However, you would have the same thing to do. You would have to secure your profits by putting a stop loss, or you would have to follow it closely on the 15-minute, because these things, these double top formations, trapped traders here, 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 and we'll see if traders are trapped here as well. And how are traders trapped? By price action, holding support and reversing, holding support and reversing, holding support and reversing, holding support and reversing, holding support at the moment. Is it going to reverse to the upside and do one more swing up, or is it going to come down? So again, In order to avoid these kind of traps, please use your stop loss above the 20 EMA. If you go in here and you put your stop loss around here, you're out of this trap and you take a little bit of profit. And I'm going to discuss each of them so to show you that if you have a stop loss above the 20 EMA as it comes down, so if you enter one of these, if you enter your short trade on one of these and you take your stop loss above the 20, you'd still have 10% profit here. It's a tiny one, but you're out of this mess that brings you up higher to a higher high. If you enter on one of these double tops and you take your stop loss, again, you put your stop loss above the 20 MA here, and I'm being very generous here, it's a 3% profit. So 10% here, 30% here. Again, you go in here and you put your stop loss. This one doesn't even break it. Here, I would just close the position. But let's say you put your stop loss again, a little bit. If you see 1, 2, 3 hours not breaking it, you do a little bit. Yeah, that's like, let's say a 0.5%. This is too small to count, and let's see what this is going to break. What this is going to bring. But between these 4 trades, you would have had profit of about 30 to 40%, and you would have been in and out of trades only following the short trend down. So let's say you don't want to long now, and I completely understand it. I wouldn't long now either. I would wait for price action to top out. And we have the indicators telling us it's topping out, but the market makers keep pushing it further. If you use your stop loss, and again, above the 20 EMA is the most visual, the most, how can I say, the easiest to remember signal, but you can use your daily traders reality levels, the pivot point, the daily open for your stop losses as the next point of support and resistance. If you had put a stop loss here and you shorted 4 times, you would have had a 40% profit, rather than, let's say, you get in here because you think it's going to come down, and right now you would be in a minus 80% or 90% loss, waiting, trapped in these 1, 2, 3 double top situations. And again, I know how it feels because I've been there, and it feels very frustrating because you haven't done anything wrong by entering a trade here. What you have done wrong is not protect the capital with a stop loss in case the market makers push it any further, because they do have the space for that. After opening the space with such a big drop, they do have the space to swing more wildly in that space, in that range. So the last tip that I'm gonna add here is no trade without a stop loss above the previous level of support, resistance, or 20 EMA. Above or below, because it depends on what direction you're going in. Yeah, by the way, let's do this, let's long this the other way around. So let's say you are waiting for a back test and you think, oh, you've seen this level, the 1180 being held. You go into, that's just for the fun, that's gonna take 5 minutes to do. Okay, you enter on the back test here at 1180, you put your stop loss below the 55 here, you get stop loss out. Yes, you lose a little bit. How much would you lose? Let me check. You would lose about 6%, but then you see this double bottom situation, you go in and you put your stop loss. You put your stop loss here and you follow it up, and you see this double top situation, you take your profit here. This would be a great 40% trade. Again, you want to follow it down. You check to see what's happening around this level. You see this level again being broken. And I'm talking about confirmations. If you were to put a 702 entry on this, you would have a lovely entry down here rather than up here, which would be much more profitable. And then again, you follow it up. And let's say you would take profits here. This is where I would take profits, here, somewhere around here. When I were to see this 1, 2, 3, 4, 5 hours not going anywhere, I would take profits here. And these would, and then when this happens, I just let it happen, and that would be an 80% profit. So this could have been a very profitable week if we had chosen to stay a little bit more adaptable. And that is, again, but that is to the detriment of a position. If you have a position at the top of the range here, you can choose to hold it open. If you don't have a position here and you're looking for entries, you're using the same 15-minute signals. And if you protect your capital with the stop loss, and the stop loss helps you stay adaptable, you could be trading this up and down. Okay, that's it. That's it from me. Thank you for joining me today. I will see you on Monday, and I'll be posting all of these online. I'll also post the recording online. Thank you guys. Bye.